Hello, welcome back. We're still on day one of Beaver Creek and I'm with Randy Riker, the CEO of Skeena Resources. Skeena is the first time you've actually been on the channel, so welcome, thank you.
Thanks for having me.
Look, some big news out in the last couple of months. Obviously you're now fully funded, the project's progressed immensely since I've been following the story, I think about 5 years ago. Why don't we just, for those less familiar, why don't you just do a quick introduction of who Skeena are and then we'll dive in.
Sure. So Skeena Resources, and I'll say that we're really going to rebrand as Skeena Gold and Silver now that we're really moving towards development and away from being just a pure exploration company.
Nice.
Okay. Our flagship operation is Eskay Creek up in the Golden Triangle of BC, and we're developing that and intend to put that in production.
Good. Okay. Why don't we just talk about a little bit, because one of the first questions when I was thinking and researching about Skeena was obviously you're now in this important phase of getting your permits and actually looking to build the mine now that the thing's funded. Who within the team has built a mine before? Who has the experience to actually get this thing up and running and going for it?
Yeah, so we're developing a team. I came on board in April of 2022. My experience has really been in operations and development projects throughout my entire career, and then now I've brought in a lot of other really experienced people to help me through the project, going through engineering and eventually through the build.
Well, why don't we talk a bit about your background then? What's the background with?
Sure. So just prior to this, I was with B2 Gold for about 6 years.
Okay.
I was part of the team that was brought in, part of the group that built out Fekola in Mali.
Wow.
And then stayed on, ramped that up, brought into production, and then later went on, was looking after the operations portions of the 3 operations.
Amazing. Okay. All right. Some pedigree there. Good. Okay. So look, why don't we? I think the best thing to do. Why don't we just dive in and just remind people of the quality of this asset? Because obviously, like I said, you haven't been on the show before. So this is it was an old mine that Barrick was running. Obviously, it produced I think around 3 million ounces from 2008 and before. I think when did it start?
Yeah. So it was mined from 1994 through 2008.
Yep.
It was brought into production. A Homestake had it, and then Barrick acquired it through their acquisition of Homestake. And they were the ones that had it when it was closed down in 2008. It produced 3.3 million ounces of gold and another 160 million ounces of silver. So really, really high silver component on it. It was the highest grade gold mine in the world, operating at 45 grams per ton over the life of the mine of gold, and another over 2,200 grams per ton of silver.
Okay, and I remember seeing in the new feasibility study that you brought out this year, obviously once it's in production, I think for the first 5 years, it's going to be the 3rd largest open pit gold mine in Canada, which is pretty special.
Yeah.
Look, I think the real important news that people want to hear about is obviously that you financed this thing, and obviously you've done a deal with Orion, right?
Correct.
I think that brings them up to a pretty large shareholder in the company, but why don't we dive into that, because a lot of this is really linked to a stream. So I want to understand what that means.
Sure, let me bring you through all the components. So first of all, we went with Orion, and it was really a competitive process with a number of different financial groups looking at funding us. Orion was first brought in 100 million US of equity. So far they put in 75 million of that. That really aligns them with our shareholders and makes them kind of a bit more friendlier lender if you like. So they're now our largest shareholder at just under 15%. And the other components then, there's a $200 million gold stream facility. So no silver, just the gold. We did that with them. That's some early money coming in before we have the final permits. So that was really important to us because we do want to do quite a bit of work ahead of those final permits.
Okay.
And then the other 2 final components are a $350 million debt package. That's optional. Basically, we can go out tomorrow and find a cheaper package for that if we want. Okay, and also then a $100 million stream that can be used as a cost overrun facility.
Yeah.
Contingency.
Yeah, okay, good. How does that impact, I guess it's quite tough to say definitively, but obviously you've released the economics and then you've done the deal, but how should investors be looking at this in terms of the economics of the project, obviously giving away for the life of mine 10% of the gold recoverable?
Yeah, when we look at it overall, there's a portion of it. The stream, though, what we did, and one of the reasons, again, we went with Orion, is we can buy back 2/3 of that stream at a cost of 18% IRR.
That's good.
So we wanted that optionality on it. So if the gold price was to increase, then we can go and buy that stream back. If the gold price was to drop, then we can keep that in place.
Yeah. Okay. What I loved as well with the feasibility study when I was reading it earlier, because you released it so recently, you actually had the sense to put a sensitivity price in at 2,500 gold, which is where we are today. I don't know if you got the numbers off the top of your head. If you don't, I've got them written here.
Pretty well.
Okay, you tell it because you'll tell it better
Yeah,
than me.
so at spot prices today, we're over a 3 billion Canadian after-tax NPV. We have a 51% IRR and a 0.8 year payback.
Yeah.
So, the numbers are pretty nice.
Yeah, I think my favorite one was over $500 million in post-tax cash flow annually.
Yeah, and I'll actually add, in the first year, it's even better because of the tax write-offs.
Yeah.
Over $800 million at today's gold prices.
Okay, all right.
Free cash.
That's pretty phenomenal.
Yeah.
Something else which I wonder about is obviously you didn't include any of the critical mineral component in the economics. First of all, why was that, and how important could that be? We were seeing things like antimony in the mix.
Yeah.
Price of antimony skyrocketing. Copper, obviously, it depends on who you listen to, but they're forecasting a deficit and obviously a higher price there.
Yeah.
These are very important minerals in North America.
What
does this impact on the project potentially?
Yeah, so when we look at the other minerals, so there's some critical minerals plus others, and we decided that we wanted to be conservative in the DFS and not put those economics in. We know we're going to get paid for the antimony. In later years, there's lead and zinc, and we know we're going to get paid for those. We just felt it was more prudent at this time to be a bit more conservative and keep them out. Now, on the antimony front, you're absolutely right. So it's big in the news today. Right now, these concentrates are looking at they'll be shipped primarily to China. What we're looking at doing is maybe a bit of metallurgical work over the next 6 months or so, seeing if we can't take the back end concentrate production and maybe put it through one more flotation stage and see if we can't produce an antimony rich concentrate from that. So we'll be looking at that shortly as well.
Perhaps where you've got optionality on the debt, maybe time to talk to DOD to see if if they'll give you some funding.
Yeah, it's certainly something we're thinking about all the time.
Okay, good. Look, one of the other things, you're at a really important part of this story now, obviously with the financing done and one main permit outstanding. Tell us a little bit more about this permit. What's the process from here? Because I think you've got 180 days with the first round, and why don't we just go into a little bit as to how that looks? The big one left for us, there's a couple smaller ones still, but the big one is the environmental assessment certificate. So the application has gone in now for that. There's the first 180-day review period, so we'll be getting questions back and forth on that. And then after that, the final application goes in. Our expectation is that we'll have the environmental assessment certificate in a little over a year from right now. And then the final permits follow right kind of after that. So in the meantime, whilst those permits are coming in, you're obviously already committing to doing what infrastructure work you can.
Right.
And then, so what's the build time after that point? I think I saw in a press release you're looking at production in 2027. Is that right?
Yeah, that's correct. So I'll remind everybody, this is a former operating mine, so there are existing permits. So we're using some of those existing permits and making amendments to it to do some of the upfront work.
Okay.
Following that, we're also looking at, in the next couple of months, getting a bulk technical sample. That allows us to do a bit more of the work in the pit area, primarily using that really for aggregates and the such for the construction. And then the real construction is going to begin after the final permits. So beginning of 26, we'll go through, and then fairly early in 2027, we'll be starting up the mills.
Good, okay. And what's the opportunity here for investors? Obviously, you're 1.2 billion market cap. Yeah. Obviously, we spoke about the economics, and there's a big disconnect there just from the economics alone. But in terms of like EV per ounce in the ground, things like that, with the Lassonde curve in mind, whereabouts do you think you are in terms of where the value could go from here to when you're in production?
Well, when we look at other companies and their valuations, say price to NAV, we think right now we're trading about 0.5, 0.6 times NAV. But when we look at other companies that are producing with very similar metrics, Lundin Gold is one, for example, And we believe that eventually we'll be getting re-rated up to that. They're at over a $6 billion market cap. So we believe there is, a runway out there where we build this, get it into production, and go from $1 billion market cap up to a $5+ billion market cap.
Yeah, I mean, being able to, with the margins that you'll make, maybe even just we didn't touch on sort of all-in sustaining costs and things like that. Maybe we should just run through that quickly.
Yeah, sure. So average production over the first 5 years, which is what really we're focused on right now, is about 450,000 gold equivalent ounces a year. Average price cost is about $550 US all-in sustaining over that period, about 650 for the life of the mine. So the economics are fantastic. We touched on a little bit about, the cash flow generation that can be had from Eskay Creek. It's pretty phenomenal.
Yeah, this is without a doubt one of the best undeveloped gold projects in the world right now. Randy, thank you so much for your time.
Peter, thanks for having me.
Thank you.